We have today independent analyst Terry Reilly with us, and he's going to talk about the movements in the corn and soybean market, and yet his anticipation of what's upcoming for the USDA May report, right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Terry, we are glad to have you back in the program. We have plenty of things to talk about this Friday. We are talking uh, early in the morning, just so people have a sense of the timing we are recording. I guess we can start with the market movements in soybeans this week. I think this was quite interesting. I think the market is still looking at the developments in the Middle East. There is no sign that this is getting resolved, and at the same time, the soybean crop is starting to get emerged in a few states in the United States.
Absolutely. I mean, the Mideast peace deal is pretty much diminishing again, and so what that's doing is bringing a little bit more market certainty to traders. Some traders are actually sitting on the sidelines. I heard volume this week was a little bit on the low side, especially for the speculators. Commercials have been pretty active. You still have heavy net fund positions on the long side for both corn and soybeans. But the largest impact with this situation has been on the energy and fertilizer shipments. And unlike the previous conflict, egg prices seem not to have moved in the higher direction from the previous conflict that we saw. This conflict has had a little bit lesser impact on the egg prices, in my opinion, but egg prices still remain fairly elevated. A lot of that has to do with the demand side of the balance sheet. But Energy prices, over the past week were up over 10%. And, you know, and that's led by the nearby contracts. But what that's doing, the rise in energy prices, basically during the month of April, spilled over into the vegetable oil markets. And In addition to the biofuel policy that came out over the past month, um, that's led to a boost in soybean oil prices. If you look at a year-to-date nearby rolling chart for soybean oil, it's up about 58%, which is very impressive. And that's underpinning soybeans at the moment. Soybeans, if you were to pull up a chart, it looks pretty choppy, kind of sideways trading range, but prices are still remain fairly elevated. And Meanwhile, the product traders have been really focused on oil share, buying soybean oil and selling meal. And with the crush rates being as high as they are in the United States and hitting basically near recent records on a daily adjusted basis, that's kind of kept the soybean balance sheet for the U.S. Fairly snug a little bit for the ending carryout at the end of the season. But and then recently there was a little bit of talk about importing soybean oil. So there was a lot of talk about that because if you look at the discount of South American soybean oil prices relative to the spot Chicago Board of Trade futures, it's about a 1,500 basis point difference. But at this point, I don't think a lot of soybean oil, if any, will make it its way into the U.S. If it does, it might make its way into the Gulf, or possibly the West Coast, which makes a little bit more sense. But Other than that, that has been pretty much the main trade that a lot of people have been looking at. But I could tell you the corn market with the sales, the daily sales have been coming out, the robust export commitments. It Traders are starting to like the corn market a little bit. And there's also a little bit of talk about less corn acres when updated in the June report. And to get to your point, we had a pretty good start to soybean planting progress along with corn. And the weather over the next 5 days looks fantastic for producers to get in their fields especially across the Midwest. And we had some drought relief with recent rains down in the Southeast, so that's easing a little bit of concerns about early emergence. So, going forward, I'm looking for at least be over that 55% mark for both corn and beans for plantings by mid this month. And if we get to that point, I think that we're in pretty good shape for summer crops.
Yes, and you are also seeing in this context a change in the corn balance sheet.
Yes, I mean ethanol margins remain very robust right now, and if you look at the difference between ethanol Chicago Platts and RBOB, um, there's a very big discount for ethanol, so there's a lot of incentive to produce ethanol right now. But crop year to date production of ethanol is maybe on the lower than expected side. So likely with USDA's current estimate for ethanol, it could fall short about 25 million bushels, and that could actually be addressed in the upcoming report.
Okay, and what are the other changes that you are seeing in the May's report of the USDA?
Well, in addition to corn, I'm not looking for a change in the export figure. Export commitments are running at a level that may reach USDA's export projection. There are other analysts out there that think it will fall short. So some people are looking for maybe the ending stocks to be up by anywhere from 25 to 50 million bushels. I can't discount that. I actually agree with that. I'm not looking for any changes in the soybean balance sheet. Crush rates are running at a robust level to meet USDA's projection, and now the export commitments are starting to catch up a little bit. So I can't argue USDA's export projection for soybeans. So I'm looking for no change in the ending stocks, but for wheat, maybe for it to go up anywhere from 5 to 15 million bushels, given that USDA may address the export program just a touch lower a little bit. One thing about the wheat market that everyone's looking at, production estimates may go down a little bit, especially for hard red winter wheat, where drought conditions still persist out west, even though over the past month we got a little bit of relief with rains. But the ratings haven't really changed since they initially came out, and the ratings are still hovering around a 2023 low. So if anything, I'm looking for a little bit of a change in wheat production to go down a bit, and that might offset a little bit of lower exports. So not much change in the ending stocks for the wheat. The global balance sheets, however, um, I'm looking for the corn ending stocks to surge. USDA attache came out with a very large Argentine corn production number of 61 million tons. USDA's official forecast is at 52. So if they raise global production, they'll likely raise the global export projection, partially offset by imports. But in the end, consumption might be up a little bit, but the ending stocks are definitely going to swell. And then as for the global soybean balance sheet, I look for higher ending stocks for the wheat, potentially a lower Australian crop to be offset by a higher Black Sea crop, and potentially a little bit lower EU crop might tighten up just by a little bit the ending stocks for global wheat.
So to wrap it up, what are the price ranges that you were expecting for both corn and soybeans? And if you want to talk about it, also wheat.
The corn, was sitting this morning for the July 478. Um, for a range going forward over the next, let's say, 30 days, we can see a little bit of a swing in that market, but anywhere from like 470, and we could potentially rally up to like 495 if we continue to see daily sales and shipments headed out primarily the Gulf and PNW with the weekly inspections. For soybeans, I like the price to hover around the $12 level. Maybe not deviate too much of 20 cents on both ends. But if we see higher soybean oil prices, which I have a bias for, then we could probably even reach the 12.30 level. And then in the wheat, maybe remaining in a tight range of uh, 630 to maybe 655.
All right, I think we got a really good uh, outlook of the market. Thank you very much, Terry, and we are glad to have you back, and you will invite you many more times.
Welcome. Thank you for having me.
If you made it this far, this is for you. If you want deeper insights into how agriculture, geopolitics, and global markets actually connect, subscribe to the Geopolitics Report on Substack. That's where I go beyond the headlines, breaking down the strategies, risks, and shifts shaping the global food system. Subscribe and stay ahead. Thank